Hi, I'm Linda Eedes from Foord Asset Management, and I'm here today with Nick Balkin, who has recently been appointed as the Chief Investment Officer of Foord South Africa. But he's also a portfolio manager on our multi-asset funds. And today we're going to be talking about the opportunities across the asset class spectrum and across the globe. But before we do that, Nick, congratulations on your appointment.
Thank you.
What does this mean for Foord?
Yeah, I take the role with a sense of responsibility. Foord Asset Management's been around for 40 years. And the performance has been amazing, and Dave Foord has been a role model to me. So for 18 years of that, I've worked with Dave Foord, and I've seen how he's managed as a CIO. So I believe that there's a lot of things to take from him. I will make it my own over time. I think the key roles that I want to look at are managing the people, process, and philosophy, and taking it forward from there. But it will be incremental over time.
Well, I know we're in good hands, Nick. So let's turn our attention to our multi-asset portfolios. Now, we're facing a very different set of circumstances at the start of 2023 than we saw at the start of 2022. Of course, then we hadn't seen the rate hikes that we've seen, one of the most aggressive rate hiking cycle in US history. We've seen inflation has already peaked. And of course, we saw asset prices coming back significantly. So in many ways, one could say that we face a better set of circumstances now than we did then. But looking at the portfolios, what has shifted over that time frame?
So I think let me take a step back first before I go forward. I think 2022 was a really strong year across the board for Foord. When we spoke the last time, we would have been speaking about a lot of the things you're saying that actually happened. We were talking about stubbornly high inflation. We were saying that the Fed was behind the curve and had to raise rates, and that made the market vulnerable. So that actually came to pass. And not only that, but within that year, we had great alpha in our global equity fund and in our equity franchise in South Africa. So it was a very good year across the board. But importantly, you can't just sit there on your laurels and say, okay, we had a great year, let's just carry on the way we always do. So what happened is, as the year went through and we, in December, saw that the market had obviously had a tough time, what we saw in the Foord International, which is a key building block for the Foord Balance Fund, is we let quite a big short future mature. What that effectively means is we had a position that reduced our equity weight in Foord International. When it matured, it meant that our equity weight went up quite significantly in Foord International, which meant the overall Foord Balance Fund equity position increased. Importantly, as we went through January, we were able to participate more with the January run because we did that. Interestingly, you asked me about positioning. Because we've had a huge run in January, we are starting to build up that short position again in the Foord International Fund. So once again, it is important to understand where you are in markets. We've spoken about how important it is to be there and be prepared for inflection points. And I think we've done that over this period.
So Nick, with rates having risen so dramatically, other asset classes such as bonds are potentially looking a lot more attractive. Are we starting to move into other asset classes outside of equities at this point in the cycle?
Yeah, well, it's a very important question. Equities remain the biggest part of the portfolio. Within equities, as I spoke to you earlier, I was saying they are quite expensive as a market. But within equities, there are many interesting equities. So let's just make sure that people understand that. Within equities, that's the case, but there are many other opportunities that are showing interest to us. As I spoke about at a previous podcast, we've welcomed Rashad and Fazana into the team, both very strong fixed income people. They're bringing great ideas to the table that are being incorporated into the Balance Fund. One opportunity was a Sasol convertible bond. In the last year, we participated and were the biggest South African buyer of the Sasol convertible bond. The bond achieves a 4.5% dollar rate, and we participate almost at spot rate in the Sasol upside. So it's a really interesting opportunity to have that as additional quiver in our Balance Fund. So I look forward to many of those interesting opportunities becoming part of the Balance Fund over time.
So it sounds like we're moving into an environment which is actually more about security selection. Am I right in saying that?
Totally.
And basically looking at the fundamentals for each of the investment ideas that we're assessing. But taking a step back and looking at global opportunities. I mean, you mentioned the hedge that we had on the US market, and you mentioned that we've actually started to increase that once again with the markets having been so strong. Another part of the market which has been very strong is the Asian equities. Now, we have participated in that. Do we still feel very strongly that that's part of where we want to be?
Yeah, I think importantly, the recovery in the Asian stocks that we own are still not to the levels where we bought them. So although in the mathematical terms, it looks like there have been big increases, there's still a way to go. Importantly, in the opposite case, America is probably facing more headwinds. In China, we are obviously going to see the opposite. As they come out of COVID, as things start to recover, the fundamentals will start improving. So what we've got is companies at a slight discount to the global tech companies, but with much faster earnings growth. So for us, it's not done yet. I also want to caution to make it feel like we are just a Chinese fund. I mean, within the global funds, there are so many themes that are interesting. There are other themes that are focused on the new materials that are going to go into EVs, like copper, like lithium, like rare earths. There's another great theme within the global equity fund that we're looking at oil for longer. How do we sell the picks and shovels to the oil producers?
And of course, we have a full team in Singapore, many of which speak Mandarin and are Chinese. So I think that gives us a particular advantage in looking at those investment ideas. But as you say, it's a very well-balanced portfolio, very much a stock pickers environment, but it sounds like we are taking advantage of many opportunities outside of equities as well as they come along. So still a bit defensive, but also have some fantastic opportunities to participate in growth. Thanks very much, Nick, for your time today, and thank you to everyone who's joined us for this conversation.